Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is July 23rd, 2012. Lots to talk about, so let's get started. This is the chart of the SPY, which is the ETF that tracks the S&P 500. And basically what we've done today, and I talked about this in the previous videos, this 137.74 level had held up pretty well. So that's good news. The bad news and the good news in some cases is this. Yesterday I was kind of in the middle between bearish or bullish, but more bearish than I was bullish because I am long term. I wouldn't say long term because I'm more of a swing trader, but more than kind of like mid-term bearish, obviously, simply because we are in a confirmed downtrend and the trend has still not changed just yet. And this upper rising wedge here is just building bigger and bigger. And let me explain to you a little bit of what happened today. Today we actually gapped down. And then, we bled off all the way down into this lower level here, which was the, I believe it was the 133.70 level. Okay, I came really close to that. I think the low of this candle was 133.84. So that's about 14 cents off before we got a bounce. And basically what happened was we went right into this bottom trend line here. Now in the previous video I said if we close below this bottom trend line here, that's going to show me that the markets are weak. And if we close the next day, which is tomorrow, Tuesday, below that low of the candle, that will confirm the move and the breakdown shall begin. Interestingly enough, like I've been saying in so many videos, that the volume is very important. The volume today was only 145,000. Our average is 150, so we're just barely below the average volume. Friday's volume was actually 142 and today's volume was 145, so it's really little bit more volume than on Friday. But you can see how volatile, even though the volume was pretty low, or pretty average I should say, the volatility in today's movement was just dramatic. So let's switch over to the daily chart and take a look at where we ended up on the day, whether or not we're on the trend line or below the trend line, or where we are on this trend line. Now keep in mind, I did not redraw this trend line. Actually, when I'm making this video, I was thinking about redrawing it just to show you an alternative trend line that a lot of people miss. Okay. Alright, this is the 10-minute chart of the SPY. This is the beginning of the day. This is the ending of the day. And basically what happened was we gapped down below this bottom trend. And this is the trend line the bottom trend line we were just talking about on the daily chart. Okay, it carries over to the 10-minute chart. We got below it, went right into this pink 133.99 level. So this level held up pretty well. I thought it was on the daily chart it looked more like the 133.70, but the 133.99 level held up pretty well. We got a bounce off that level, and to be honest, I don't see, so there's no other pivot points or anything on this side here indicating a bounce other than this mathematically calculated level here. So that's that's pretty cool in my opinion. I don't have the purple line on this, but maybe I'll draw it in later. Anyways, we bounced off and then we made an up move. We bullishly consolidated. We went up again and then we bullishly consolidated, and we had one more push higher. Now here's the thing: with low volume, are you surprised? I mean, if you've been watching my older videos, are you honestly surprised that the markets actually pushed higher even after the gap down? So we gapped down, we bled out just a little bit before we got a bounce, and it's not surprising to me to see the markets get propped higher. I mean, when you see this one candle here, this one big move, I think the low of this candle was 134.92, and the high of this candle is 135.42. So that's about a 50-cent pop in just 10 minutes. I mean, in all honesty, this is institutional game playing, and they're able to do it simply because the volume is so low. Now if you look here, it was on the 10-minute chart, we were trading above this 20 moving average, and then we actually broke down under it, but we were unable to close it. Pretty much at the last minute or so of this 10-minute chart, we got to spike up. The institutions were able to save it. And what I mean by saving it is because the normal moving averages is the 20, the 50, and the 200. I mean, that's normal. That's the going rate. And what I mean by going rate is, everybody uses these moving averages. So a lot of institutions like to watch these moving averages, and they try to make sure that price doesn't get under these moving averages, or else you're just going to have a horde of people just selling off, and that's not what the institutions want right now. Okay, so Long story short, let's take a look a little bit closer here. Where did we end up on this bottom trend line here? You see this? We actually literally, let me just zoom in here. We literally came right into this trend line here and then had a small little like 1 cent bounce, and we ended up right there. So we are technically on a technical level above this bottom trend line here. But it's so close to this bottom trend line that I really can't say heads or tails whether it's a breakdown or did they actually save it and we're still within this rising wedge. We're back to the daily chart on the SPY, and this is, oh wow, look at all these lines here. This is what I'm talking about where, let me just reload these drawings here. We went and we broke through the trend line, the bottom trend line. Well, actually, we broke down and then they saved it. Which is why it closed right on this bottom trend line. It went right back into the 20 moving average on the daily chart, and right back onto the 20 moving average on the 10-minute chart. So what does that say? That says we could go either way. Now let's just say we get a bounce here. All right. So if you take a look at this candle here, we had this doji candle in low volume, and then we definitely got that bounce. Right? Now let's take a look at this candle here. We are on low volume. It's not a doji candle, but it really doesn't matter at this point because the bottom line is they saved it here and they saved it again here. Okay? Or the question is, did they really save it? All right. So here's the thing. What I was talking about earlier about redrawing the trend line. A lot of people don't do this because once they draw the trend line, they stick with it, and that's great. I'm not saying that's wrong. Definitely not. I mean, it's just my style where if I see a potential trend line, additional trend line to be drawn, then I'll draw it. You see how that works? Actually, I could probably draw it maybe over here. Actually, over here. So if we connect this bottom pivot point here and this bottom pivot point here, which is considered two lower pivots, it makes up a trend line. Any two pivot points is considered a legitimate trend line. We can disregard this pivot here because sometimes within a trend you don't have two exact or three exact pivot points here. I mean, this is close enough in my opinion. So did we really break down? Maybe not. Maybe we actually just broke, maybe we just bled right into this bottom trend line here and we could have a potential pop to the upside. Why am I not going to go bullish short term just because this bottom trend line could be a potential reversal just like this over here? Well, it's simple. If I go long, first thing is it'll be a counter trend trade, and we all know that counter trend trading, we're swimming against the current, and that's very risky in my opinion. Okay, I'm a very cautious trader. Okay, if you guys haven't noticed, I like to preserve capital. Okay, because I'd rather not be in a trade than be in a losing trade. Okay, that's obviously just my opinion. Now, yes, we could pop tomorrow, then that's fine. But the reason why I'm not taking the long side on this trade is because the volume is just not there. Had this been higher volume, in fact, not only that, even if we had higher volume here, I would think that we would still have a potential of dropping. Even though it's lower volume, I still think we have a potential of dropping. I think this candle here was institutional game playing. It happens a lot. You'll be, in my opinion, I mean, everybody gets upset at institutional game playing, but it's there, and we just have to accept it. Now, the point is this. We have this pivot point here. We had 1 day, 2 days. I need at least one more candle, which would make 3 days, okay? And then, oh, I'm sorry, one more day. So say we have one more day and then it creates a doji candle on higher volume. Then I say, okay, short-term bullish, I will go in, okay? Right now, I'm staying in cash simply because I just don't know what's going to happen. But here's what I can say. As a chess player, and we are mostly chess players that watch these videos, I know you guys are interested in chess, which is pretty cool. But like a chess player, we need to plan what's going to happen. Our game is against the institutions. Our game is against those hedge funds, those people who outbid us all the time because they got the money to do it. We just don't have the capital. We are retail traders, and even if we're millionaires, I mean, we just don't have the capital unless you guys are billionaires. But if you guys are billionaires, then I don't know why you're even watching these videos. So in my opinion, we're like Robin Hood, right? We're taking from the rich and giving to the poor. Nah, I don't know about that. But anyways, what I'm trying to basically say is it's a game against the big dogs, okay? What we need to do is figure out what they're gonna do, figure out what the market in general, the general traders are gonna do. Because even though the big dogs are as big as they are and they can manipulate markets, when the volume increases, there's nothing that they'll be able to do, because all the retail traders put together will outdo any hedge fund out there. But hedge funds standing alone in low volume, meaning if there's no retail trader participation and the volume is so low, then the hedge funds can just do whatever they want. This could be definitely a fake out, to get people on the long side, and then they're just gonna take it down. Now here's the thing: tomorrow, I think tomorrow is gonna be a big day. The caveat, maybe not tomorrow, but Wednesday will be the day. And the reason why I say this is simple. Just like I said in the previous videos, Apple will have earnings at market close Tuesday, okay, which is tomorrow. So it might be another low volume day. Who knows? But I think that the Apple earnings are going to have a big impact on the market, simply because they're the biggest stock or the biggest company within the S&P 500. So let's just say all the stocks, 90% of the stocks in the S&P 500 goes down, and Apple gets good earnings, and Apple spikes up. Apple is going to be able to fight that downtrend and then maybe break even. The second option is Apple gets really good earnings, the markets are still bullish, and then the markets are just going to catch a bid, in which case the save of the bottom trend line, well, we should get another pop into these levels here, and I will definitely make another calculation for these levels here once it does that. Okay, if the move is big enough, then I'll be able to get the data I need to make another calculation or another calculated resistance point. Okay, and the third option is the general market population, which is 90% of most stocks that follow the S&P 500. They start bleeding out, and then Apple gets bad earnings. Highly doubt it, but anything is possible, and that's why I don't play earnings. But let's just say it doesn't meet expectation, Apple drops. Guess what? That will be the day that we probably break down from this 50 moving average. Okay, so as a chess player, that's something we have to watch out for. Just patience. Okay, but as a chess player, here's the deal: we close above here, we're bullish. We close below this candle. So this candle is the biggest thing right here. Okay, we close this. We close below this candle. I'll be bearish, because we landed right on this trend line here. So confirmation, in my opinion, can go either way. So we close above here in a single day, I'm gonna stay bullish. But we close below this candle here, and we actually break down under this 50 moving average, then yeah, I think we're headed down to at least this level here, very minimum. That'll be very minor resistance, and then we'll have this point here, which is where the 200 moving average should come into, and then we'll have not resistance, support, and obviously our major support is going to be at this gap window here, this gap fill here, and then obviously this is going to be our biggest support line, which is all the way down here. Okay, so that's something that you have to watch out for. So again, we close above here, I'll be bullish. We close down here, I'll be bearish. And again, volume makes a big difference. So just because I say that doesn't mean I'm going to think it tomorrow. Okay, so Wednesday will be the big day. I'm going to probably stay in cash until that happens. Tomorrow may also be another volatile day. So we just need to keep an eye out on that. This is the daily chart of the UUP, which is the US dollar, and the US dollar is obviously inverse to the markets. Dollar up, markets down. All right, so check this out. So we had this double top over here in the past, right? And then we didn't confirm above this candle here. We broke down. We went right into this 2280 mathematically calculated level, which held up pretty well. Also, this 20 moving average gave it even more support, and even if it did break down from that, we'll also have a lot of support there. We continued higher. We broke through this line here. Now this is a breakout. Okay, this is well, okay, if this candle was green, this would have been considered a breakout, and if this volume was higher, then yeah, I would have considered this this pattern here as a breakout, because we broke out of major resistance, right? And then I'd say we're shooting for the moon. Okay, and it'll be $85 first target on the DX, which is the dollar futures. Okay, so maybe I'll show you that in a little bit. Bottom line is, however, we did not break out, because we closed below this upper I guess resistance line there. We closed below it, so that shows weakness. That shows that there's a possibility that we may actually come back down to retest that 2280 level, or at least this upper this trend line over here. I mean, that's definitely a possibility. I would not rule that out. Okay. So that's something again that we have to watch out for, and I have a feeling it's probably going to be something to do with the caveat, or the thing that sets it off is going to be the Apple earnings. Today was Baidu. After hours, Baidu did good and it was up about 6% after hours. So that's that's showing some positive trading for Baidu. Okay, so let's take a look at the DX. We're going to see it's pretty much the same as the UUP. Price difference is just going to be a little bit different, so pattern is obviously going to be a little bit different. We had this double top just like the UUP. We did not confirm above this candle here. We broke down. We went right into this level here, which is what we all predicted, which was great. We broke out, but guess what? We are now above this line here. But did we close above this candle here, which was the first breakout? No, we did not. And this candle here, don't pay attention to this candle here, because this is after hours trading. This is the dollar feature, so right now it's moving as we speak. This candle is here is somewhat of a shooting star, but again, it wasn't on substantial volume, so I can't predict that this would be a reversal. We may get some support here before the dollar goes higher. Once we get a spike in the dollar, and I think Apple is going to have a lot to do with it. Well, not directly to do with it with the dollar, but any European bad news will have a great effect on the US dollar, in which case this 85.23 mathematically calculated level would be my first target to the upside on the dollar. Alright, this is a chart of Walmart. So we've been talking about Walmart for the past, I don't know how many videos already, but I did say that after this down move, I wouldn't say my prediction, but the charts are telling me that we'll probably start trading sideways or start consolidating, and hopefully we consolidate right above this 20 moving average before we drop down. I think I said this in like two previous videos, or 2 or 3 previous videos. You guys can check back to verify if you want. And that's actually what it looks like it's doing. So hopefully soon enough, I'm hoping we break down, and we break down before earnings come out. Okay, so we need to close, in my opinion, below the $70.56 level in order for me to have a smile on my face. Right now I'm in the money on Walmart, okay, but again, in order for me to smile, I need to see a close below the $70.56, which would definitely tell me that the stock is now breaking down and is probably going to start rolling over. Okay. Now this was an interesting chart. This was a chart of Seagate, and this was very interesting because very similar to the SPY. We had this bottom trend line here, and what they did basically was they bled out Seagate, and then in the last night's video I mentioned that these two moving averages makes me worried, because that's going to have some support over there, and sure enough it went right into these two moving averages. But just like the SPY, they were able to close it right above this bottom trend line here. In fact, they closed it right above my mathematically calculated level. So it's very interesting how these calculated levels work time after time again. Let's take a look at the daily, the intraday. So on the intraday, the gap down was actually almost right under, well, I wouldn't say, it was right in between these two mathematically calculated levels, just like the SPY. Very interesting. And then, we bled off. We broke through this bottom trend line, which almost put a smile on my face until the institutions recovered. And now we're back into this, this rising wedge pattern. No difference on the weekly chart here. Let me just load my drawings in one more time. We have this down move, okay? It's lower than this low here, okay? And then now we're bearishly consolidating, or creating this bear flag. I'm just waiting for it to fall apart in pieces. Now, they do have earnings coming up on the 30th, so I'm hoping it breaks down before then. If not, then you know what? Oh well, that's just the breaks. I get out, and I'm already in the money, so no big deal. I have a break-even stop on this guy, and I could actually put a in the money stop, but I think because of the volatility that I've been seeing lately, I'm thinking having a wider stop would be better. So a break-even stop, a stop is your friend, obviously. So a break-even stop, in my opinion, is should suffice for this play here. In any case, I'm way out of time here, so this is your 7-minute market update. Thank you very much for stopping by to watching my videos. I really honestly do appreciate it. God bless to you all. Good luck to your trading, and I hope to see you in the next video.